Have you ever thought about your place in history, the journey you're undertaking, and the future you are creating for a new generation? At STANLIB, we're committed to making progress possible. It is why we move beyond ideas and swiftly into practice. We apply our humanity, knowledge, and experience to make meaningful change possible in our communities.
A very warm welcome from myself to everyone here today. I mean, it's really, really exciting for me to see how this fund's come to life over the last 2 years and to see investors in the room that have got to benefit from everything that the team's created.
And by their very nature, infrastructure assets have the ability to not only provide you with the financial returns that you're looking for, but also with the societal benefits that we need as a country as well.
Infrastructure investing as a strategic imperative, with Derek Msibi, STANLIB CEO.
As the infrastructure space gets more crowded, we are very pleased that we have got a leading position in this space. As a result of having the right team, we believe that our chances of being successful in driving the overall returns of our customers are much more improved. What is interesting is that the research that is emerging in private markets is indicating that there is a lot more persistence of performance in private markets than in public markets. Why is that significant? Well, it's significant because, one, choosing the right team and choosing the right fund manager for such assets is the single biggest driver of returns and is the single biggest differentiator of whether you are successful in investing in infrastructure.
Our fund journey made possible with Greg Babaya, Head of STANLIB Infrastructure Investments.
In 2020, we set out to create a fund, a combination of funds which had a diversified range of infrastructure projects. The primary overriding strategy was to create scale and diversification in that scale, to have a pool of assets that were cash yielding because that was important to our investor base, particularly the pension funds, and ideally to have a large proportion of those having inflation-linked returns. So we've raised 11.2 billion Rand in commitments from more than 40 individual investors. So that does give testament to the fact that we've gained significant traction in some of the conversations we've had in these funds. And again, in our world, there's two sides to the ledger. We got to raise the funds, but then we have to deploy them. And this is, I think, the primary difference between private markets and listed markets. Public markets is the hardest it's just as hard to deploy the money compared to actually raising it, and you can't raise it if you can't demonstrate that you're going to deploy it. So we've drawn 7.2 billion of that 11 over time. We've invested in 27 individual underlying investments across 4 different sectors, and we still have 4 billion of commitments we're currently working on.
Impact made possible in 2022 with Marissa Bester, STANLIB Infrastructure.
So this slide shows you the geographical spread of some of our investments, and you can see that it's quite well spread around the country. It represents some renewable energy assets, grain storage, road projects, and digital assets. Some of the highlights that we've achieved over the last 12 months are that a total of 28 million Rand was spent by our investee companies on enterprise development initiatives in their local communities. Although this number sounds quite big, it's nice to break it down into small examples to make it more alive for you. So, for example, I visited a few months ago one of our project sites in the middle of the Karoo near Hannover, and we visited a few ladies who were provided with industrial sewing machines. They had no means of income before they were provided with this, and the project company, in this case it's a solar plant, provided them with a contract to make tracksuits for the entire high school and primary school in that town.
Investment Approach Case Studies with Andy Lowe, STANLIB Infrastructure.
our strategies evolve through thousands of different conversations with industry participants. And through those conversations with industry participants, we thread a needle through those conversations. And at the end of that needle, if we've done our job well, we'll come out with a strategy that we think is workable, that we can try and then go and execute. So the strategy that we're working on at the moment is an embedded generation strategy. So how do we solve some of corporate SA's problem around expensive energy, dirty electrons, and blackouts? It's by building as much energy within the fence as possible to try and mitigate some of those issues.
A local lens on infrastructure investment presented by our panel of experts, with Greg Babaya, Head of STANLIB Infrastructure Investments, Professor Anton Eberhard, Power Futures Lab Graduate School of Business, Kevin Lings, STANLIB Chief Economist, Michael Levington, CEO at Navitas, Andy Lowe, STANLIB Infrastructure Principal.
Okay, so the story on South Africa in terms of broadly infrastructure, fixed investments, not a good story, right? And it hasn't been a good story for some time. It's not as if it's suddenly a new event. And I know we focus a lot on the electricity outages because it's kind of topical, but if you look at our journey around fixed investment, it's been in a state of decline for the last 10, 15 years. And we've neglected infrastructure in this country for all of that time. And so the broad base of infrastructure is under enormous pressure, whether you're talking social infrastructure, business infrastructure, whether it's specific to electricity, but equally railways or ports or any of those critical areas, they're all under strain, right?
And so Eskom, and this is extraordinary, Eskom is filling the gap in the lack of energy planning by government. The IRP is out of date, but Eskom now reckons we need between 50 and 60 gigawatts of new renewables and storage by 2030, and gas as well. It can't finance this because of the debt on its balance sheet. The state is fiscally constrained, so this has to come from private investment. I estimate, and this Eskom has recently also estimated, this will require R1 trillion by 2030. That puts your numbers in perspective of just how big this is in the power sector, because it's one of our most capital intensive infrastructure areas. I think more realistic, the project's more likely to close, and then we should see regular auctions going forward for renewables, for storage, for gas as well. Distributed generation, this is, I think, the big exciting story where we've really made huge advances. And the biggest one was regulatory reform. So getting rid of the requirement to have a license, first raising that threshold to 100 megawatts, and now quite soon, not at all. I don't think people realize how significant this is, because what it means is that the energy minister and the regulator are no longer gatekeepers to the market. And so the market is open for investment to come in.
You know, when you're buying from the grid, I mean, it's one of the highest in the world. So even if you start buying renewable energy to reduce your carbon tax exposure, and again, something else that's going to start hitting people from 2025 is you're going to see a very strong increase in carbon taxes from, I think, currently around $8 a tonne, and the target is now $30 a tonne by 2030.
JP Morgan Asset Management, a global lens on infrastructure investment. With Chris Simard, Infrastructure Investments Group, JP Morgan Asset Management.
So again, looking at core, looking at value add. To me, the way I think about it is more core in your portfolio is a good place to start. More visibility into returns is a good place to start, especially in a new asset class. And then you can start to add a few of those kind of higher risk value add type managers as the balance of your infrastructure allocation. But to me, especially in a year like this where you're seeing a lot of volatility in the listed markets, having an asset class that still delivers expected returns, regardless of what's going on in the broader market, I think is a really important piece to a portfolio.
Impact Made Possible, Vumatel Case Study, with Ditlof Marie, Vumatel CEO.
What we're seeing in the world today is, and this is the key thing, is connectivity is the center of everything. If you want to eradicate poverty, if you want education to work, if you want South Africa to compete or just stay aligned with the rest of the world, that connectivity is super critical. And it's not DSL connectivity or just type of a mesh networks. It's dedicated data in abundance. And that's the critical thing. And we saw that quite quickly because people in the lower LSMs areas, the previously underserved areas, are today using 400 gigs a home in Mitchells. It's 1.5 times more than what people are using in Sandton. And the reason is there's 7, 8, 9, 10 devices always active in those areas. And this is for us the challenges. The gap that we closed early 2000s will be tripled if we don't close the digital divide and the digital connectivity now. If you ask me what I would have loved to change is have more connected homes hitting the COVID period. We didn't have enough homes in the previously underserved areas. And just imagine we had 4 or 5 million of these homes connected, how it would work. So if you look at Mitchells today, Arambi with the government built the first call center in Mitchells Plain, basically on the back of fiber connectivity. So people don't have to travel and work in Knox 24 hours, take 4 or 5 taxis to get to places. They can actually on their doorstep go into different areas and work.
Turning environmental, social, and governance goals into tangible and impactful solutions, along with a financial return. We work with the best talent, equipped to power our growth and capabilities. Be a part of our journey, part of a tapestry greater than ourselves. One where we imagine, inspire, and influence. One where we turn opportunities into real possibilities. Impact made possible by STANLIB.